Welcome back, and thank you for staying tuned to Business Today. Now, tonight we are discussing the pending pay-as-you-earn deduction payments to employees, as employers are expected to adjust the pay-as-you-earn deductions and reimburse employees backdated to the 1st of March this year. Joining us in the studio for more insight is the Ministry of Finance Deputy Executive Director, that's Mr. Justus Mwafongwe. A very good evening, sir, and thank you for joining us.
Good evening, Janet. Good evening, viewer, and thank you for having me.
Thank you, sir. I think for many consumers, this sounds like a really good news, but perhaps just can you refresh our viewers what necessitated this tax amendment that we're discussing today?
Yeah, thank you very much. The tax amendment is part of our tax policy. The tax laws are continuously reviewed, and the main reason is to, of course, to stimulate our economic growth. We also want to improve our competitiveness in terms of regional setting as well as international, but also to prevent tax evasion and tax avoidance, especially the issue of BEPS, which we call base erosion and profit shifting, because multinationals tend to shift profits from countries where they undertake economic activities to countries with a low tax rate, the so-called tax havens. So you have to constantly review your tax law so that you remain on par with international developments.
Now, the minister introduced...
But it's also important to mention that part of our review is also to provide relief to the taxpayer, specifically what we are going to talk tonight. And this, in a way, will stimulate your economy, because when you put income in the hands of individuals, it means you are likely to see improved consumption. So therefore, your value-added tax as well is likely to improve, because the people will then spend more because they have more disposable income in their pockets. Yeah.
Now, the minister introduced this tax amendment already as early as February this year, way back as February this year. Why has it taken Parliament around 6 months to really finalize this legislation?
Yeah, this is really due to the legislative process that you need to follow. You will recall that the minister has made an announcement in February when he tabled the budget. But thereafter, you then have to commence the process of amending the law. And that process is not only dependent on the Ministry of Finance. The Ministry of Finance will come up with what we call the draft, the layman draft, but then you have to consult various stakeholders. You have to table this proposal to Cabinet. There are Cabinet committees Cabinet Committee on Commerce and Cabinet Committee on Legislation. So all these are stakeholders that needs to be consulted, but also the taxpayers, the representative taxpayers, and then you must then put through the amendment through the legal drafter, and that process in itself can take long. And after that, the Office of the Attorney General need to look at the various proposals before this is tabled in Parliament. And then Parliament itself has its own process. As you know, we have two houses. First the National Assembly, and then thereafter the National Council. So it's really just due to the legislative process. But I must say this time around it was even quicker. Looking at the time where we came from February, we are now in October, but we are talking about not in October, in September, but we are talking about the amendment law, which has already been gazetted. Actually, the time was faster than usually.
Now, talk to us about the compliance date. I'm sure many individuals are curious to know, when do we anticipate this reimbursement to be implemented?
Yeah, in terms of compliance, this is really nothing new, because as you know, pay-as-you-earn is deducted on a monthly basis. Every employer is obligated to deduct the pay-as-you-earn from the salary of each and every employee. And this is done every month. So what has happened now is really just that we have increased the threshold, and all the tax brackets have been adjusted upwards by 50%. So there is nothing new. The employers are still expected to deduct these taxes from the salaries of the employees. They are still obligated to pay what they have deducted over to NAMRA. But what will happen now is, because of the law that has been changed, they will have to do some adjustment and refund that what has been over deducted since March up to now. Because even though the law is just being gazetted now, the effective date of implementation is from 1st of March this year. As you know, the tax year for individual runs from 1st of March up to end of February. So that is really the effect. So everything remains the same, except that this adjustment must be done. So that at the end of the day, at the end of the tax year, employer should then have deducted the correct amount through this adjustment, and what they have over deducted, they are just reimbursing it back to the employees.
Maybe for the benefit of the viewers, is the reimbursement coming from the receiver of revenue, NAMRA, or is the reimbursement coming from the employers? Just for the benefit of the viewers to understand that.
Yeah, this time around, what we have announced, we have granted authorities for the employers. Actually, we have granted authority and also a bit of directive, because that is what we prefer. To say the employer are the one that should refund the employees. Because if we leave it to NAMRA to refund, then it means all the taxpayer will have to wait until they submit their tax return, which will take place as from July next year, because the deadline will be end of June. So the expectation is that the employer must refund the taxpayers. Of course, they will have some cases where you have maybe smaller employers, they might experience cash flow situation, or those employees that did not work for one employer for the whole of the tax year. So in that case, those employees that did not work for one employer throughout the tax year, they will have to wait until they submit their tax return. Then NAMRA will then refund them, not the employer, not the employer.
Okay. Now let's talk about the tax aspect of this reimbursement. Is it tax-free? Is it also going to be taxed? Just clarify that for us, sir.
Yeah, of course, you cannot pay tax on tax, because what we are talking about here is tax that has been over deducted as from March up to now, for 7 months basically. We are now saying, because of that over deduction, because we have changed the tax brackets across the board, and the effective date is backdated. So from March up to now, there has been an over deduction. So that is what we are paying back to the employees. And obviously, it's a tax being paid back, so there is no tax on it.
Now, what if an employer does not have enough money to make such payments to the employees? What happens in that instance?
Yeah, on average, this shouldn't be a problem in terms of cash flow for employers, because remember, as I've indicated, the employers already have that obligation to deduct. In fact, at the end of October, end of September, they should have already planned their cash flow such that there is that expectation that when they pay people's salaries, they then deduct that amount, which is to be paid over to NAMRA. But then of course, if there are situations where, for example, the amount that you have to refund is more than your payroll amount, you can then spread over this refund system, maybe over a period of 2 months or 3 months, so that you can manage your cash flow properly. So we are not compelling employers to make a once-off deduction. It really depends on the employers, but then we are flexible to say, if you cannot pay this amount at the end of October, you can maybe spread it over a period of 2 months or 3 months. But it really depends on the cash flow situation.
Now, is end of October then the expected compliance date, or in terms of this directive, when should employers then really be expected to start this reimbursement process, and especially for employees that want to sort of, they feel the reimbursement is taking long, how can they then find sort of recourse? How do we find that balance?
Yeah, our expectation is really to say end of October, that will be the D-Day. Yeah, because I mean, we are now somewhere in the middle of September, so we feel that employers still have got time, part of September, the whole of October, to prepare. And then make sure that these refunds or reimbursement, as you're putting it, is paid over to the employee at the end of October. Yeah. But again, as I said, if there are situations where there is issues of cash flow, that can then be extended over a period of time. So we are just asking also the employees to be a bit of patient, that companies sometimes are faced with cash flow situation. So, but patience is required to be exercised so that they can understand the situations of the companies as well. But October is the D-Day.
All right, so end of October is the D-Day.
End of October, that's our expectation.
All right. Now, there are, something a little bit off topic now, there are reports of employers who deduct tax from the employees, but then they don't pay it over to the receiver of revenue, that's NAMRA. How serious of a violation is this, and what are the penalties to that?
Yeah, that's a very serious violation, because pay-as-you-earn money is money that is held by the employer into trust, because you are paying the employee every end of the month. You are expected by law to deduct and pay that money over to NAMRA. Is actually money belongs to the employees, because it's a mechanism of collecting taxes, because even though pay-as-you-earn is collected on a monthly basis, the assessment is actually undertaken on an annual basis. But it's an easy way to make sure that individuals pay their fair share, because if I leave it to you, Janet, if I pay you the full salary and expect you each and every month to go and pay over to NAMRA, you will probably have difficulties of doing that. That's why we are entrusting this to the employer to do that. So it's a serious violation, and penalties are very high. So at the moment, it's 10% on an outstanding amount penalties and 20% interest on top of, of the outstanding amount. I mean, that's why you have this incentive scheme which is running now, because there are situations where companies fall into that trap of tax arrears. So it was then decided to say, okay, let's give a bit of a breather to the taxpayer, so that if they update their account, then the penalties and interest will be waived. And of course, you are aware that this program is going to end of October as well. So, so I think those that did not make use of the opportunity, they need to hurry and make sure that they update their account, because the penalty is very severe.
Now, is the tax amendments, is it applicable across the board, or are there categories who qualify to benefit from this?
Yeah, these tax amendments, particularly for the amendment or adjustment of the tax bracket, is applicable across the board. So the major beneficiaries are individuals who are earning less than 100,000, because we have now increased the threshold from 50,000 to 100,000. So if you are earning up to 100,000, no tax at all. But those that are earning even beyond 100,000, even in the million, 1 million, everybody will benefit, because when you increase the threshold, that benefit trickles down across the board. So everybody is going to benefit.
All right. Now, as we conclude our discussion, perhaps just some final words to the public about these tax amendments.
Yeah, it's just really to make a call on the employees to exercise patience and to give employers an opportunity to adjust their system, because you remember, this is not only a calculations, it's also system driven, because of technology. All these things are being done on systems, so employers need to have that time to adjust the system and then make sure that the calculations are then done, because employers must also make sure that they calculate the correct amount of tax that they must refund. But we also want to call upon employers to make sure that they need to plan their cash flow. This is not something new. I think this news has been, it has been discussed all along since the announcement by the minister during the budget tabling. So it's something that employers are aware, and it's not something that employers are doing it for the first time. They have been doing it whenever there is adjustment of tax bracket in the middle of the tax year. These refunds are being implemented. So I think everybody needs to be patient, and we are expecting that at the end of October, maybe the majority of the employees will then receive their refund. But what is important is that we still have, I think, 5 months until the end of the tax year. So during that period, I think those ones that cannot refund right away, they will then make use of the remaining period in the tax year to make sure that the refunds are implemented.
All right. Well, Mr. Mwafongwe, thank you so much for joining us this evening, and thank you for sharing this wonderful news.
Thank you very much.
Well, there you have it. That is Minister of Finance, Deputy Executive Director Justus Mwafongwe, just discussing the pending pay-as-you-earn deductions, which make the necessary reimbursements to employees, which will be backdated from the 1st of March, this year, and definitely some relief for many of us, and some could receive this relief as early as end of October. So that's wonderful news. Now, coming up next are the financial indicators.